These streets of Colombo in Sri Lanka were witness to a civil war less than 14 years ago, and as it ended in 2009, the people looked forward to an era of peace and development. The government under then President and current Prime Minister Mahinda Rajapaksa embarked on a series of infrastructure projects. These included HAMBANTOTA Harbour and Colombo Port City, which came with a combined price tag of over $17 billion.
This is the infamous HAMBANTOTA project. Located in the southern region of Sri Lanka, the stronghold of Rajapaksa family, this project is said to be politically motivated. And as per the experts, that's exactly why, despite knowing what this project could do to Sri Lanka, the government went ahead with it. Operational since 2011, the harbour recorded losses till 2016. And now, a Chinese investor has its lease for 99 years.
With the promise of strong revenues and a stronger foothold in the global commercial landscape, Sri Lanka took loans from other countries including China to finance these projects, but things have not gone according to plan.
The total investment that we made and the return that we are expecting, there's a huge gap. Normally what we expect is when it comes to the infrastructure development, the government should keep the right and then we can invite the investors to come and invest. But here, in most of the cases, what has happened, the Chinese government, they have directly involved in Sri Lankan development, and ultimately the ownership of those investments passed to the Chinese government or the Chinese investors.
Sri Lanka looked set for a reprieve from its debt burden when it leased 80% of the HAMBANTOTA project to China Merchants Port Holdings Company for 99 years for $1.12 billion. But that has not happened. Reports suggest that instead of using this money to pay off earlier debt, the government used it to add to its foreign reserves and honor unrelated foreign debt obligations. 258 kilometers away lies Colombo Port City with an estimated cost of $15 billion. It was to house a special economic zone that would use tax exemptions to attract investments from domestic and foreign companies. But the project itself has seen multiple starts and stops, mainly due to political unrest and problems with funding.
Advertised as an economic game changer, Colombo Port City is far from changing the game in Sri Lanka's favour. Rajapaksa government had earlier claimed that this project was an attempt to compete with Dubai and Singapore. Sri Lankan government took a loan of $1.4 billion from a Chinese investor for Colombo Port City, and the investor has 43% of the project on a 99-year lease. Economists and experts fear that like HAMBANTOTA project, Colombo Port City can also fall completely into Chinese hands given the current situation where Sri Lanka government cannot pay off its debts.
Experts blame the situation on political mileage overshadowing economic rationale and the fact that unfavorable viability reports were ignored.
They played political aspects greater than the economic aspects. Most of the decisions were made based on political decisions and where they can get the votes, and not where the investment can be more successful, where there can be returns to meet whatever the obligations that are coming from the loans. There have been many a times, whether it is the opposition or whether it is the academics and even the banking professionals, they were all warning, and not only the locals, even the international observers, they were questioning whether these investments can be sustainable by the Sri Lankan economy.
Neither port has delivered much revenue in the last few years because of weak commercial activity. First came the pandemic, which disrupted global supply chains and curtailed operations for the better part of 2 years. And then came an economic crisis through which Sri Lanka has had no money to pay for imports and suffered setbacks that have hurt exports. Now Sri Lanka is on the brink of bankruptcy and is negotiating for aid from agencies like the IMF and other countries including China and India to stay solvent. So these projects may take years before they add to Sri Lanka's coffers.